Apple losing its shine? That's the question many are asking as the tech titan navigates a tumultuous start to 2024. The status of Apple, once undisputed as the world's most valuable company, is shrouded in uncertainty. Perhaps it's time to dive into the turbulent waters of Apple's precarious position and explore the series of unfortunate events that have led to a noteworthy decline in its market value. Our saga commences at the dawn of 2024, when whispers of a potential antitrust case began to circulate. The U.S. Justice Department, a formidable force in the corporate sphere, was rumored to be gathering information for a potential investigation. This notion alone sent tremors through the financial world, prompting a significant decline in Apple's share prices. The ripples of this alleged case were felt for 5 consecutive days, the impact of which was nothing short of staggering. The fallout resulted in a catastrophic loss of around $177 billion in market value. This wasn't just a minor setback for the tech behemoth, but an unprecedented event marking the most substantial market value destruction at the start of any year on record. This shocking revelation sent shockwaves through the investment community, triggering a rapid and significant shift in investor behavior. Investors, driven by fear and speculation, began to rotate their portfolios. Winners were quickly sold off in a frantic panic, and underperformers were scooped up in an attempt to balance the scales. This redirection of investment strategies contributed significantly to Apple's decline, further deepening the wounds inflicted by the potential antitrust case. With this sudden shift in market dynamics, Apple's market value fell to a concerning low of around $2.8 trillion. This decline brought Apple perilously close to the precipice, teetering on the edge of being dethroned by Microsoft, now valued at $2.7 trillion. With these changes, Apple's market value fell to around $2.8 trillion, inching dangerously close to Microsoft's $2.7 trillion. But the troubles didn't stop there. In fact, the situation began to unravel in an increasingly concerning manner. By the time summer had rolled around, particularly by August, the prestigious technology behemoth Apple was caught in an unprecedented downward spiral. It was facing what experts deemed as the largest slump among its peers in big tech, a group which includes global giants such as Amazon, Google, Microsoft, and Facebook. The details were staggering. A whopping loss of $314 billion in market value had been wiped from Apple's ledger. This catastrophic decline was not without reason. It turned out that the primary attributing factor was a noticeable downturn in sales of their flagship products, the iPhone and iPad. This discouraging piece of news was made public in Apple's official earnings report, causing a flurry of worry among investors and stakeholders. However, making the situation more dire was an external factor, completely out of the company's control. The stock market had taken a hit, a downturn that was sparked by an unexpected and rather alarming increase in inflation. This sparked fears and concerns about a potential market downturn and a prolonged recession among economists and market watchers. In the face of these global financial conditions, Apple's stock prices took another hit, leading to a further decrease in their market value. The numbers reflected the harsh reality. In a single day, Apple had its market value reduced by another $154 billion. This event marked one of the largest single-day losses for any U.S. company in history, setting a precedent that no company would ever want to follow. The fallout did not stop at Apple. The ripple effects of this financial fiasco reached its largest single shareholder, the legendary investor Warren Buffett's Berkshire Hathaway. The value of its Apple stake saw a steep $9 billion decline, causing a significant dent in its investment portfolio. Despite these formidable challenges and the seemingly grim outlook, Berkshire Hathaway remained bullish on Apple. It stood firm on its belief in the tech giant's potential and made an interesting move. In a surprising show of confidence amidst crisis, it went ahead and purchased nearly 4 million more Apple shares in the second quarter of the year, demonstrating its unwavering commitment to the company. This had a ripple effect on its largest single shareholder, Warren Buffett's Berkshire Hathaway, which saw a $9 billion decline in the value of its Apple stake. Despite these challenges, Berkshire Hathaway remained bullish on Apple. even purchasing nearly 4 million more Apple shares in the second quarter of the year. In summary, a potential antitrust case, investor portfolio rotation, diminished iPhone and iPad sales, and a market downturn due to inflation have all combined to create a storm of uncertainty around Apple's start to 2024. This technology giant, a beacon of innovation and success, has found itself in uncharted waters. With these factors at play, Apple's to the year has been nothing short of turbulent. Consider the potential antitrust case. The implications of such a case could send shockwaves through the technology sector and beyond, causing a significant ripple effect. Next, investor portfolio rotation. As investors shift their focus, this could potentially impact the company's standing in the stock market. The decrease in iPhone and iPad sales represents another significant concern. These products have long been the cash cows for Apple, driving much of its revenue. A drop in sales could significantly affect the company's bottom line. Then there's the downturn due to inflation. This is a global concern, one that affects all businesses and not just Apple. The effects of inflation can be far-reaching and detrimental to the overall health of the economy. With its status as the world's most valuable company now under threat, the question remains, will Apple regain its shine or continue on this downward trajectory? Only time will tell.